Assalamualaikum and good morning and everyone. My name is Muhammad Shakir bin Shah Ahmed Ali, and today I will be presenting my financial review analysis of Petronas Chemical Berhad, also known as PCG. The objective of the presentation is to evaluate the financial performance of Petronas Chemical Group Berhad by using financial review analysis. Financial review analysis is important because it helps you understand whether a company is financially healthy, profitable, efficiency, and managing its assets and capable of paying its debts. In this presentation, I will first introduce the company, explain the financial statement used in analysis, followed by the financial ratio, the interpretation of the company financial performance, and finally my investment recommendation. Alright. And then company background. First, I would like to introduce Petronas Chemical Group Berhad. Petronas Chemical Group Berhad, or PCG, is one of the largest integrated and chemical product in Malaysia. The company is subsidiary of Petroleum Nation Berhad, or Petronas, which is Malaysia National Oil and Gas Company. PCG was incorporated in 1998 and was listed on the main market and Bursa Malaysia Security Berhad in 2010. The company produces a wide range of chemical products, including commodity chemical and specialty chemical. These products are supplied to many industries such as agriculture, construction, automotive, electronic, healthcare, and manufacturing. Besides serving a customer in Malaysia, the company also exports its product to many countries around the world. This shows the Petronas Chemical has a strong international presence in the global chemical industry. The company also focuses on information sustainability and environmental responsibility. Through this effect, PCG aims to produce high quality chemical products while supporting long-term business growth. Overall, Petronas Chemical Group Berhad recognized as one of the leading companies in the chemical industry and playing a market role in Malaysia is company. And then financial statement. Next, I explain the financial statement and they use this analysis. The financial data obtained from the company integrated report the financial year 2025 and 2024 and 2025. And I use the two main financial statements. The first is the statement of financial position, which provide investment information about the company, asset, liability, and shareholder equity. The second is the statement of profit or loss, which show the company is revenue, expense, ni profit, ni loss. Based on these two financial statements, I calculate 2 of 11 financial rotation. The rotation will the group into 4 categories, which are regulatory rotation, asset management rotation, debit management rotation, and probability rotation. And then liquidity and asset management. This slide I present the liquidity and asset management rotation. First, the current and decrease from 1.17 in 2024 to 1.44 in 2025. The Q ratio also decreased from 1.32 to 1.11. Although rotation decline, they were still above 1. This means the company still had enough current asset to pay the short-term liability, but its liquidity position become weaker compared with the prior year. Next, the inventory turnover decreased from 60, 35, 60, 86, 60, 35 times to 60, 08 times. The indicator inventory also has significantly slow rate in 2024. The receivable to now also decreased from 7.04 to 6.86. The company to a title logger to collect payment for its customer. The total assets to now also decline from 0.51 to 0.47. This shows that the company generate low seller from its total asset compared with the previous year. Finally, the average collection period increased from 51.85 days to 53.21 days. This means customers to slightly more time to pay the outstanding balance. Overall, these rotations show that the company efficiency managing its assets become weak in 2025. And then deep and profitability. Next, in the deep management profitability analysis, the total deep ratio was 35.2% in 2025. The meaning that about 35% of the company asset we financed by liabilities. The time interest in ratio become negative, minus 3.97. This happened because the company record on operating loss, making it difficult to cover its interest expenses. Looking at profitability, net profit margin was negative, minus 7.46%. Return on liability was negative 5.30%, while return on asset was minus 3.50%. This negative return indicate that the company experienced a net loss during the financial year. As a result, shareholders not receive positive return, and the company asset we are not able to generate profit infinitely. Next, interpretation and investment recommendation. Based on the financial, I can calculate that Petronas Chemical Group Berhad experienced weaker financial performance in 2025 and compared with 2024. Although the company still maintain adequate liquidity, its efficiency in managing asset decline. The company also relied slightly more on debt financing compared with the previous year. The bigger concern was profitability because the company record a loss and causing several important ratios to become negative. Besides on this feeding, my recommendation is not invest in Petronas Chemical Group Berhad for the financial year 2025. This recommendation is supported by the negative net profit margin, negative return on equity, negative return on asset, on the negative interest in return. Investors show will the company is performance improve before considering an investment. And that's all. Thank you.